All right, all right, all right. Welcome, welcome, welcome. Let's start off like this. Look at that little me over on the left-hand side. How's everybody doing? It's good to see you and glad to have you here this afternoon. We're going to do a little bit of day trading. As I said, we're going to do 777. On Tuesday, we tried to do a couple of different strategies, and of course, the market was running like crazy. And so our scalping strategies didn't do too well. So we wished we would have been doing 777. We kept saying, hey, we should be taking some trends here. And of course, today, the day that the market, we think we're going to do trends, the market's dead. So we probably should be doing some scalping and not do 777 because 777 is a trending market when a market's wild and crazy. Now, the market's not up bad today. I mean, my account's up. I guess one of my accounts alone is up $6,000. The other one, just look right here, I'm up another $3,000 on that one. So 6, 7, 8. 8,500 today. That's not a bad little day, I guess. But of course, there's always a chance it could come back down, right? I'm writing an article on taking profits. How do you take profits, Lan? Oh, I think that's a fun thing to have an article to write on. But I want to come in and just real quickly before we go in. I mean, the market's not doing anything, so I can't place an order. I mean, it looks like it's trying to break, but that's an A1. Look at how many fake A1s we've got in here. A1, A1, A1. So we'll give it a minute. We'll just wait, see, as we're at the top of the hour here with the market, and we're going to just kind of wait and see if the market wants to move a little bit. It looks like it's trying to go higher. There's NASDAQ. That's a range 25, range 50. Range 25 is not even going. It's dead. And usually on the NASDAQ, range 25 is pretty wild and crazy market going crazy, but even on this one, it's a little slow today. So let's see. Dow's being a little lazy. Look at this, just lazy market today. We'll just have to wait and see if we can't wait and see if the market's not going to move a little bit. But let's come in here and talk about not the Russell, S&P. Canary in the coal mine. Let's come in and talk about the canary in the coal mine, shall we? All right. What's the canary in the coal mine? Now, we've been watching this market like a hawk, right? Like everyone has been. Watching this market come down just off this little top formation with the little ABC pattern. Now, it came down, and we've talked about this, where this was the unusual part right here, where how fast it came down, because it didn't really do anything out of the ordinary. This was a nice move, but nonetheless, it didn't really break any rules. The only rule it breaks is how fast it came down right there. And this was a little bit longer downtrend than we would like to have seen, but not really. If you come back to the overall, right? If we look at the overall, it came right back to where we anticipated, right back to here, right? It didn't do anything we didn't anticipate. We called this clear back here where this thing was going to come back to the Fibonacci bow tie, and it came right back, touched it like a train on wet rails. Okay, so this market really isn't anything out of the ordinary, and it's not even in a bear market. A lot of people kept saying, oh, it's in a bear market, it's in a bear market, and they don't know what a bear market is. Okay, those people read teleprompters for a living. So they don't know what the hell a bear market is. Bear market, higher highs and higher lows, lower highs and lower lows. We didn't get lower highs and lower lows. We got a high here, which was the top of the market, but then we got one low. We got the second one. We got the second low. It has to break this one before you're in a bear market. Okay, this one doesn't count as a bear market. Go ahead and break that. That's not a bear market. That's just an ABC retracement. All right, because markets, as we talked last week, markets go X1, 2, 3, 4, 5, A, B, C. That's still a bull market. All right, that's still a bull market. Oh, no, you're in a bear market. No, you're not. You're not in a bear market till the market does that. Once it does that, now you can say, oh, yeah, I'm in a bear market. All right. If it breaks that low right there, oh, yeah, now you're in a bear market. But you ain't in a bear market if you're just getting an ABC retracement. Why? Because that's standard fare. Standard fare. Because now we come in and we do one of these. We come in here and we go like this, and we go A, B, C, and we go back up. And if we go back up, well, my hell, we go 3 drives up. Now we're back up into the bull market again. But we never left the bull market. We just went through a little ABC down, a little ABC up. The name of the game is higher highs and higher lows, right? You have higher highs and you have higher lows. That's an uptrend. You have lower highs and you have lower lows. That's a downtrend. But you got to have this one break here before you're in the bear market. Otherwise, you're just in an ABC pattern on a retracement, pull back to the delta cone of probability, the one standard deviation, and away we go. We go back up again. That's normal. That's normal. All right. Those are called Darvas boxes, right? You guys all know what a Darvas box is. So Darvas box is when a market goes through one trend, all right? One A, B, C, D pattern, one full Elliott wave pattern. And then we go through another Elliott wave pattern, just like that. And that's how you become a bull market, because you have 3 of those in a row. So if you have 3 bull patterns in a row, now you've gone into drive 1, drive 2, drive 3. And what did we just do? We just completed this drive right here. This one right here. So we got one more to go. And it can keep going. You go 3, 4, 5, 6, 7, 8, 9, 10. Certainly can. Sometimes does. They can go 1, 2, and then start to drop. But if it comes down here, and then you get one that goes like this, and just flips and comes down instead of going up, boom, 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 like this, and you get one like that, and then you get one like this, and then you get one like this, and then you get another one like this, and I'm running out of screen. It doesn't give me screen. More screen land, more screen. And then we get one like this, and then we get one like this, one like this, one like that. Now you can say we're in a bear market, right? We're in a bear market. Oh, nasty booger. That's a nasty, nasty booger, because that becomes your first bear market box, whatever I call it now. I forgot the name of the damn thing. Darvas box. And then we go into another Darvas box, and that Darvas box is lower than this Darvas box. So you have a Darvas box here, which is a bull trend. You have the switchover Darvas box that goes into the first bear trend. Then you go into the next Darvas box, which is the second. Actually, it's the second bear, because this is the neutral. So this is drive 1, drive 2, drive 3. So this would be considered drive 1, counter trend, drive 2, and we'd have to do one more to get our drive 3 on the way down, and that would be a true bear market. Now we don't see a lot of that in the S&P 500, because it goes up all the time, right? Because the market's manipulated. And you don't believe me. I've said, how many times have I told you the market's manipulated? The market's manipulated. It's controlled. It's all one big carnival game. All right. It's just one big carnival game. That can give you comfort or not. You know, I don't know. If you knew that the market was rigged, maybe that gives you confidence. I mean, you're like, well, heck, if it's rigged, I don't have to worry about it ever. You know, it's going to always just do whatever the riggers want it to do. And I don't have to worry about it. I just play the rigged game. Well, that's apparently, you know, that we're too small to do anything but just play the rigged game. You don't think it's rigged? I don't know if you guys, I don't care if you lean left politically or lean right politically. You should go listen to the interview Tucker Carlson did. What was her name? Hold on. He amazing interview. Amazing interview. And if you're like, I don't like Tucker Carlson. Well, I don't care if you don't like Tucker Carlson. Do you like money? You should go listen to this interview that he did. Let me see. I'm going to get the name of the lady that he interviewed. Her name is Catherine Fitz. All right. If you look at the little marquee for Tucker Carlson's interview, she's wearing a red top. All right. Red and white top. So she's a lady, blonde lady with glasses, and she's wearing a red top. That's the one. Central Bank Digital Currency is the title of Tucker Carlson. And if you don't think these markets are manipulated, oh, I'm sorry. I'm sorry that you are living in La La Land. These markets are so controlled, so manipulated. So, you should go listen to that article. Go listen to that interview. Catherine Fitz, Power Grids, Bankers versus the West Secret Underground Bases and the Extinction Events by Tucker Carlson. This woman, she's in the know. All right. She's in the know, and she spills the beans. But it doesn't matter to us. It doesn't make any difference to us. All we need to know is that we can reverse engineer it and we can make money off of it, make our lives better. We try to do better. The name of the game is to try and make our lives better, try and make our families' lives better. And we can do that through playing the manipulated market. Go to the casino. Go to the, I don't want to call it a casino, because this isn't really a casino. Although it is. It's what, you know what it is? It's a carnival casino. Yeah, that's what it is. It's a carnival game casino. It's completely rigged. and it's a casino. You're betting on the carnival game. So that's what it is. But hey, as long as we realize it and we understand it, and we have no problem with that, well, then let's just play the casino. Let's play the carnival game. That's what it is. It's a carnival game. So this is the S&P 500. We know the market has a tendency to make three drive patterns. That's how the algorithms have been rigged. All right. The algorithms go in three drive patterns. Now, I learned this when I was at Chicago Board of Trade. All right. So markets go up, down. Now, that one first little pattern right there is your one delta cone of probability, or what we call the one standard deviation, right? There's lots of tools that measure that. One of them is the Fibonacci ruler. It's probably the most common, most popular tool that measures the one standard deviation retracement. All right. So if a market goes up, you go from bottom to top back to the one standard deviation. And then we anticipate it does that 2 more times. Up, back down, up, back down. Now, when it goes up and down, it has a tendency to go through these patterns here. So it goes up like this, and then this one to this one, and then it comes back down. When it comes back down half or 50%, that ties off back to this previous high, and that becomes what we call a Fibonacci bow tie. All right. Now, if it comes down here, does the same thing, goes up here, and then when it comes back down, well, 50% or one standard deviation usually comes back pretty close to this high right here. So that's how you get what we call Fibonacci bow ties right here, and that's how we can measure, and that's how we knew. We didn't know, but we knew that the market was going to come back down. Turn on the cheat codes. That when we were looking at the long-term S&P, we were going to get a Fibonacci bow tie that looked like this. And we were going to tie that baby off. That's why up here, back in January, we said, well, if it does a Fibonacci bow tie, it's going to come down to this price here. And Land called it back in January and said, the market's going to probably make a Fibonacci bow tie. Everybody sell their long positions, their growth positions, because this thing's going to come all the way back down and everybody's going to freak out when it comes back down to 48.16. It came right back down within pennies of what we said it would be, right? Which, if you know the math, it's nothing fancy. Landon have a black special ball that he read. He just said, look, the market goes in Fibonacci bow ties. It likes to make these one standard deviations. And if it makes a one standard deviation, well, hell, one standard deviation from this level to here is coming right back to that level there. Look at that. Oh, just amazing, like a train on rails. And it did just exactly what we anticipated. Why? Because it's all ran by computers. And that's how the computers have been programmed. So now, are there caveats that can say, hey, the market might do something different this time? Yeah, of course. There might be one or two things that could change it, but it's a really powerful computer system. It's called Aladdin, and it's written by BlackRock, and it's been licensed out to like at least 10 other big giant firms. So it's kind of like a hive mind. It's kind of like the Borg, and it just does its thing. And 10 of the biggest companies in the world own this thing, and they control it, and they run the world, and they control all the money. What do you think the market's going to do? It's going to do basically the same thing over and over and over again. All we have to do is recognize what that is, make money off of it. Buy low, sell high. That's really all it's doing. It does a process of accumulation and distribution. I'm writing an article on how to do it. All right. Down to the details. I had phone calls come in from a couple of people this week. Actually, Lan, I'm making money. You said get into PLTR, and I'm making money on PLTR. What do I do? I don't know how to handle it when I actually make money. I'm so good at losing money. When I make money, I don't know what to do. I had 2 phone calls like that. One of them was one of my own sons called up and said, man, Dad, I'm doing pretty good. I'm making a bunch of money. I'm scared to lose it. What do I do? So I said, man, this is an issue I better talk to my friends about. So for Pit News Magazine, it's not going to be in the April-May issue. It's going to be in the June issue. So you're going to have to wait till the June issue to get this article on how to, because it's all about this manipulated market, recurring price patterns and these Fibonacci bow ties. But we buy, and once we get making money, we want to do the distribution like the big banks, right? They accumulate on the way down, and you've heard me say this a million times. They accumulate on the way down, and they distribute on the way up. All right. So they're selling out on the way up. Well, we want to do the same thing. So I've turned it into a process, all right, based on percentages. If you make a certain percent, you liquidate a certain percent. You let the rest go till it makes a certain percent. Then you liquidate a percent. And then you let it go till the percent, you liquidate that percent. And then you let the rest run for a longer term trend for the possibility of a Hail Mary, and you trail with a trailing stop. And that's how you trail. And now, of course, there's caveats. It's like, well, Land, I don't want to trade like that. I want to go for longer term trends. I want to hold on longer because I don't want to taxable event, right? If I sell out, I have to pay tax on it. Well, just pay taxes on it. Paying the taxes on it's better than losing it all. Oh, gee, I made $10,000 and then it all went back down to zero. But you know what? I didn't have to pay taxes on it. I could have taken 10 grand and paid the 2,000 in taxes, but no, I didn't want a taxable event, so I didn't sell it. And then I lost the 10,000. But you know what? I'm happy about that because I didn't have to pay taxes on it. Okay, that makes sense to me. All right, don't pay taxes. Don't want to have a taxable event. Okay, just lose the 10,000 then. Just sit on it till it all goes away. All right, do what you want. Makes sense to me. I don't want a taxable event. Okay, well, what are you going to do? Just lose 10,000? Lose your entire profit? It'll come back. Yeah, it could. Might not, but it could. Nobody knows, right? All we can do is, draw our trend lines and see if things will come back. All right. If you lose your 10 grand, well, at least you didn't have to pay taxes on it. All right. So that's the way we play the game. Don't pay taxes. So lose your 10 grand instead. All right. So what are we going to do? Well, we've got a nice little ABC pattern in here right now. So we're coming off the bottom of this thing and we're looking at this. And we're saying, okay, so I got my little button right here, a little button right here. I could go over here to this higher one, but that was kind of a little bit of that manipulation I just talked about, right? We talked about that in the past. Now this thing's up here at 61.8 projection, but we're looking for it to come up to that 90% line. It would be nice if it could come up there. That little red, yellow line right there, that's the 50 period moving average. So it's right there at the 50 period. Up here a little bit higher, that's the 200 period moving average. And then up here a little higher, that the green one is 100 period. And they're moving together, so they're kind of converging right up there, just above 100%. 130.9 is the gold pattern. We got to see a little ABC pattern in here. So we'll probably even get a like this. Maybe it might go up to 90. Might wimp out a little earlier. I don't know, but we'd expect, let's say 90, and then it'll come back down. And if it'll stop right here at this Fibonacci bow tie, which is this red line, we'd have a wimpy, it'd be kind of a wimpy bow tie, right? Wouldn't it be what we call a wimpy bow tie? Because the full bow tie would be all the way up to 100. So we like to see it go all the way up to 100. That would be a full bow tie. Beautiful, straight out of the manual bow tie. So that means this thing's got to keep going all the way up to 100 before it retraces back down to the bow tie level. And that would be nice, because if it comes out a little late, a little early, it drops like down here at 90% or 80%, doesn't quite make it up into the target zone, then that wimpy bow tie comes down like that. And usually this then drops below that level here. All right. So if we measure from this level here, from B to here, that'll usually stay pretty close to what it does. So if it doesn't make it, let's say this is the top, well, you probably see a drop down into this region here, way down below the peak. All right. But it's broken, it's closed above it. So that's good news. And generally, once it closes above it, we anticipate that it's going to rise up to the 90, 100% level up in here. Now, depending on how strong that market is, it'll reverse at 90. If it's a nice, strong market, it'll reverse at 100. And if it's like an awesome market, it'll go to 130.9. All right. But we've also got this previous high up in here, which is a Fibonacci bow tie level to the downside, right? So we got that one there. So we're looking for it to come up there, and that's right around the 100% level. If it would come up there, I'd be really super happy to see that. But then I would expect it to come back. And we have to have a little blow off, a little profit taking, a little ABC patterning going on, right? Because we have to have our drives, drive 1, drive 2, and then we have a little pullback, and then we have drive 3. So what I'm trying to tell you is, if you're a little bit sad right now, you're like, oh, I missed it. Oh, I missed it. I don't want to get in. I'm going to get in right here. I'm going to buy high. Wait, I think you'll be fine. I think nothing else. You'll be able to buy it right here at this price on when it's over here, ready to turn around and go back up, as opposed to riding it up, turn around, have to sit through a whole drawdown to get back up. All right. If it goes up here, it's going to come back down here. You can buy it to get back into this market down in here. And you would probably be happy if it came down a little bit further. You'd like to see it come down here and go. And then the first candle break a new high, green to red, red to green, green to red. You could buy down in here. So I think you're going to have another opportunity. I'm keeping some powder dry. I got a little cash on the sidelines waiting because I'm looking at some of these markets and I want to see them. I'll get a little pullback. One of the markets I'm looking at. Let's come in here. I'll show you another one. Let's go see if there's some day trading happening. Nope, still dead. All right, so let's come in here. I'll show you something else that's fun. We'll come in here. I've got, oh, this is the wrong market. I wanted to go. Let's go into this market. Hold on a second. We'll go over to the stock market for a second. Futures market's dead. We can't day trade it. Can't day trade that. How do you day trade that? You don't. You sit on your hands. And I don't want to just say, well, guys, it's not a good market to day trade. Let's go somewhere else. So we'll have a different lesson. How's that sound? How come that thing's not starting? Oh, there it is. All right. Now, don't get all freaked out. I've been working on some of our option stuff for our class. So, all right. So we're going to come in here. And I wanted to go over to, this is the impressive 10. That's what I called it. These guys all made 100% last year. They all exceeded 100% profit last year. How's that? That's pretty crazy, right? Impressive 10. You know what's missing out of there is PLTR, because that one was like 200% or something, 300%. That was a big one, PLTR. So that was going to be in there. But that's the one I've got lots of money in, right? And I've told you that. And I made that trade recommendation right down in here when it started to bounce and rebound off of this level here. That's when we all got in, right? So we all knew, get in right here. We did. We all got in. This is the one where everybody's calling me on the phone and saying, I'm making money. What do I do? And then I've got people going, well, I missed it. I wanted to get into this, but I didn't get in when Land said to get in. So what do I do? Look at that beautiful little pennant formation right there. Oh, they changed the way they have to draw pennants like this now. So look at that beautiful little pennant formation. That is a beautiful, perfect little pennant formation. Drive A, drive B. So this is like a A1, A2. Away we go. So how is it? Let's measure it. Count and measure. Do your measure. There we go. So we're right almost at 90% right now. Almost there. And then what's it going to do? Well, we'd expect it to blow off, right? Get up in here 90, 100%, and we expect to come back. So that's what I'm saying. Be careful. First of all, if you want to take some profits, you can take a little off. Take 20% at 20 when you made 20%, take 20%. When you made 30%, take 20%. When you made 50%, take 20%. You can do it every 20%. Every 10, 15, take 20%. Once you get to 50%, you've made 50% of your money and you've taken 50% off. Let the rest trail out on a trailing stop. You can do things like that. But that's just kind of a little rule of thumb that you can use. And I'm going to write that article in Pit News Magazine. You'll get that table and a couple of examples and little different strategies. But that's a nice way to do it. That's how I do it. I like to do what the big boys do. They sell out all the way up this trend, right? They sell out. You're like, I don't want to sell. Land said to not sell. I might have a taxable event. Well, okay. Well, if you don't want a taxable event, wait for it to come down here and you can lose your 10,000 and then you don't have to pay tax on it. But Land, I want to hold it for the long haul. I want to go for a whole year. Well, that's a different strategy then. There's nothing wrong with that. Then draw your trends longer. Don't freak out when it's just doing these little things. Come in here and say, well, I'm going to go for one full year in this thing. Okay, well, do that then. It's a whole different pattern. Now, don't look at the daily charts. Come in here and just look at the weekly charts. And that's where you're going to trade off of. You're going to trade off the weekly charts if you're going to hold it for a whole year. Then you can use this chart, or you can use the monthly charts and just come down here and say, well, this is the one I'm going to use right here because I'm just going to trade the monthly charts. I'm in it for the long haul. Okay, well, this makes it a little bit different, right? We had one little pullback. You could have got in right there. Or, whole different view when you go to the weekly, monthly charts, and you can just look at what I'm going to trade it for a whole year. I'm never getting out. I'm going to hold it forever. Okay, well, the only way you can make money is eventually you got to sell it so you can liquidate your profits and make some money. But if you're going to trade it for the long haul, trade on the monthly chart and don't worry about these little tiny moves in here. Little tiny moves. I mean, $100,000 investment. That's a lot of money from here to here. And you might want to tie it in, lock it in, take some out, take some profit, go buy yourself a new toy, 4-wheeler or something. I don't know, motorcycle, whatever you like. Okay, so pay some taxes. Oh, I got to pay some taxes. That's the way it works. That's the game. That's how the carnival game's played. All right, so that's what we're looking at here. And that's just a few ideas for you on what I think we're going to have happen here and how you can take some profits along the way and how you can get back in when it comes back down. Now, if you're doing that thing where you're like, well, I'm up 20%, I'll take 20 off. I'm up 30%, I'll take 20 off. I'm up 40%, I'll take 20 off. I'm up 50%, I'll take another 20 off. 20%. Okay, well, now you got 50% of your money back and you're up here pretty high. What do you do when the market starts to come back down? Well, you start adding back in. Well, it just dropped 10%, I'll put 20% back in. Dropped to 20%, I'll put 20% back in. Well, it dropped another 20%, I'll put another 20% back in. So it dropped 20, 30, 40. When it drops 50%, you got all your money put back in and away it goes again. You do it again. At the end of the year is when you pay your taxes. You don't pay it right now. It all comes out in the wash at the end of the year. So that's how it works. Just make money that way. It's a simple process of accumulation distribution with the Wyckoff theory, and that's how you scale in and you scale out on your percentages. You hear me talk about that stuff ad nauseum, and so people were saying, well, I don't know how to get out. I don't know how to take my profits. Okay, well, that's how you do it. All right, so let's go back and look at some of these are good markets. Some of them here. You want to have some good markets to trade. These are some good markets to trade. Look at this one. We put some options on that one. So these are good markets. These are all recovering. Most of them have already recovered from look at that one. Netflix. Woo! People are watching movies. Daily, PLTR. We all talked about that one. PM. This is Philip Morris is really kicking some rocking. I don't want to swear and say kicking ass because that would be bad for me to say that bad word. So I'm not going to say kicking ass, but it's doing really well. All right. This market is kicking butt. I can say kicking butt. I just can't say kicking ass because then I have to go to confessional. So I won't say that. All right. Let's see. It's really doing well though. Whew. It's about, we got to see this blue light intercept. So it's kind of getting a little toppy up in there. We want to see it maybe come back down and break those blue lights, give us the opportunity to go into the next drive. So if you feel like you missed it, don't worry. Don't worry. Don't worry. It's got to make a Fibonacci bow tie, right? Where's the bow tie? Probably this high right here. So we're in the bow tie right now. So if we come in here and we come in with this, boom, boom, boom. How high does the bow tie go? Usually goes to 200, right? That's the right there. So there's 200. Now it doesn't have to go all the way up to 200 to be a bow tie. It can be a wimpy bow tie. All right. So if it goes to a wimpy bow tie, that's okay. Comes back, if it stops right there and comes back down, well, don't expect it to stop here either. It's got to go up to 200 before it comes down to if it comes back early, it goes to 50%, and then it comes down, well, then it's going to probably come back down to 130.9 somewhere in here. We'll have a little bit further down bow tie, right? So we'll just look for some mathematical placements right in here. So then if it comes down there, then you can buy right here on the first green candle to make a new high. And away you go. You're back in. You can just buy an option right there. That'd be a good time to buy a call option. Okay. So that's a good one. We like Philip Morris. I don't know if there's any options. You know what's funny is these are really good stocks. And I was looking at them this afternoon. And I was trying to see if we couldn't get some leaps on some of them. I was going to make some trade recommendations on leaps. Look at the spreads on some of these. Man, crazy. 0.5. That's not too bad. But then look at that one, 16%. This is 5%. But then I was like, well, if we bought that, we need to be able to do some covered calls on it. So we come in here and how are they trading out? And so I made a mistake. I was in here and I bought, I think it was one of the airlines. I came in, I bought, I was so excited. I was like, oh my goodness, look how great it is. I can buy a really good leaps on this. I went and bought like 10 of them for us. And I was like, I'm going to do poor man's covered call with this. And we're going to make, this will be a really nice one. And then I went and bought them. And then I was like, should have checked to see how the shorter calls were. And I went in here and I was like, oh no, we can't do covered calls on this stupid thing. And the last thing I want to do is hold all these options on this stupid airline without being able to do covered calls on it. This is a covered call class. So then I went in and I deleted it. I was like, forget that one. That's why we have $1,400 down, because I was just like, I want this one. I bought like 10 of them, and then I was like, can't do covered calls on it. I ain't going to hang on to it because that wouldn't be any fun for the class. So I got rid of it. That's why we're down 1,400 in this class account now. It's a bad mistake. Land's fault. Sorry. All right, that kind of thing happens. All right, so that's what I call the impressive 10. We've got another one over here called the 100% club. Oh, the impressive 10 was not 100%. They were just nice markets. I think some of them made 100%. This is the 100% club. So everything here broke 100% profit last year, 2024. So if you want to take a screen capture of that, take your little phone, take a picture. I did a lot of research to find these. Made ChatGPT work really hard. See how hard my research was? I really love that AI stuff now. Stuff that would have taken me like a week to kind of figure out all this stuff and find all these things and do all the research and download all the files and do all the now I just say, hey, ChatGPT, what made the 100% club last year? Boom, popped them off for me in about 5 minutes. So there they are. You can just take your little camera and go, and you can see them. So AP, that was one that made 100% rally last year. So where these things have pulled back, these are all going to be good opportunities to get in. So we could just come in here and buy call options on every single one of them, be rich beyond our wildest dreams if Trump's Trump train comes through. And that's how Doc Brown made millions of dollars. He made all his money on the Trump train. It pulled back like that, and he just went in and said, hey, everything that was 100%er, he just went in and said, I'll just buy calls on all of them. Bam! Millions of dollars. That's how it's done. Yeah, it can be that simple sometimes. All right, so here you go. That's all there is to it. That's a nice little move. That's our spider web, right? Natural trend line. Come in here, mathematical trend line. There you go. And then you got horizontal trend line. So right here, this is pretty good shape. Now it's 1, 2, 3, 4, 5. You could look for a little, this is a rally bar, a rally. We could look for the little ABC in here and then go to the next one. And that would be your little, right? That's where you're going to find your little pennant formation. So keep that in mind. You get a little pennant formation, and then you could buy your call option during that pennant formation. Let's go look at a call option on here and see if they're any good on this first one, APP. I haven't done this part yet. I haven't come in and said, well, what would a leap? Where is this thing going to be next year at the end of Donald Trump's 1 year time frame in office? Well, we're paying $8,900 investment in it. We'd have to pay $370 in spread, which is 0.4. That's a big spread, but 0.4, it's all relative because you're buying 325. If you come down here, the thing is, if you look at the 17 days and it's dead, there's nothing here. Oh my hell, look at that. See, $120 for 17 days. You can't do it. You can't do covered calls on this one. Not that it matters. I mean, maybe you don't want to do that. You don't want to do poor man covered calls. You don't want to do covered calls to make a little extra money along the way. If you don't care about that, then you don't need to care. You can just say, well, that's a good, that thing, that Apple oven went 100% last year. It might go 100% this year, especially if Trump does this thing and we Trump fan, then you believe in Trump, then 325, you put 8,900 into this market and you got a pretty good chance of making good money by the end of the year. Who knows? Nobody knows. All right. The only person that knows is BlackRock. All right, so now we got our little ABC pattern in there. See, just like a train on rails, I keep pointing out these little patterns to you, like, that doesn't really do that, Land. But then I show you a million examples, it still doesn't do it. It's like talking to my Democrat friends, just like, oh, I'm a Democrat too. We're all Democrats, right? I'm a Democrat. I'm a Republican. Look at that. Right there. Same pattern over and over and over again. Just a recurring price pattern. If you don't believe me, you don't believe me. You don't believe me, you don't believe me. I think the reason you're in this class is because you probably believe me. Otherwise, I'd be annoying for no reason at all. Come and watch these annoying classes. But at least maybe you get some information out of them that can help you make a little money. See that? Pretty cool stuff. Every single one of them has these little ABC patterns. Oh, look at that one. Beautiful. This is Coinbase. Coinbase. Now, if you want to just do Coinbase with you can go do the Coney. CONY is the yield max version. All right. The yield max version. This one gives you dividends. Gives you high dividends. Pretty darn high. Pretty darn high. Pretty darn high dividends. Look at that. Perfect 3-drive pattern. Drive 1, drive 2, drive 3. We're at the bottom of a three drive pattern. Now this is on a Coney. This is on yield max fund. So yeah, you have to take this one with a grain of salt because this one is not really designed to be manipulated in the way that the others are. This one is, again, this one is an option strategy based on the underlying base coin. Let's go see just for fun. You want to go see just for fun? Just for fun. Let's just for fun. All right. Maybe we can't do any fun. Land doesn't have his fun up. Hold on a second. We'll pull up the fun. Coney. Come on, fun. It's being a little slow. Fun's being a little slow. Come on. All right. Just for fun, we'll put in CONY. Coney. And what's we're paying out on this thing? 43 cents. 43 cents. Let's say we put in $10,000 in this thing. Should we? Just for fun. All right, funsies. We're going to come in here and we're going to say we have $10,000 and we're going to put it into Coney. And rather than buy a call option on it, and we're going to divide that by $8.21, which is how many shares we would get. We'd get 1,218 shares. So if we got 1,218 shares and every 30 days we got 43 cents times 0.43, which is how many pennies they give you for the number of shares you have, you hit equals on that, you would get $523 for every $10,000 you put into the market. There you go. That's not bad. That's not bad. You can't shake a stick of that. That's a $500 dividend every month on a $10,000 investment. So that's kind of fun. So that's what that one is. That's Coinbase. All right. Coney is the dividend version. Okay, let's come down on Carvana. Do you know what these guys do? Have you ever driven down the freeway and seen these big stacks of glass buildings that have cars all over inside of them? And you're like, man, that's some kind of weird parking lot. But then at the top, it says Carvana. You know what those are? They're supposed to imitate a vending machine. It's a vending machine for cars. Not kidding. You go get your little Carvana app on your phone, and you can buy your phone from a vending machine. Now, some people do it, believe it or not. Now, I'm of the generation where I wouldn't buy a car from a vending machine. All right, so I look at this Carvana stock, and I'm like, that is the stupidest thing in the world. Who's going to buy a car from a vending machine? But you want to see something? You want to see something? Look at this. Look, just for fun. Let's go take a look. CVNA, Carvana. Look at this. I'm going to show you something. If you got the paid version, you can see this. If you don't, you have to look at mine. Earnings per share, sales per billion. Look at that. You got to be kidding me. $13.67 billion was their sales in 2024. Can you believe that? They sold $13 billion worth of cars in their little vending machine, car vendor machines. People get on there and buy cars through the app, and then they go to the little vending machine and it gives them a key, and they go up and they get their car and they drive out. That's it. They don't talk to nobody. They bought a car from a vending machine. Oh my hell, are you kidding me? $13 billion worth of cars sold from vending machines. All right, I guess. I guess. That's what they do. Believe it or not. Believe it or not. Let's come down here and look at the weekly. Look at this thing. This thing's just gone straight up, man. People buying cars from vending machines. Back here, it was $11. Look at this. Back in 2023, May 14, 2023, right where that arrow came in from the Bulls and Bears, this thing came in and all the way to the top there. It went from $11 and it hit a high of $291. And that was from 23 in 2 years. In 2 years, it went from $17 to $296. People buying cars from vending machines. That's one of those things that really does. That just kind of blows my mind. Blows my mind. People would do that. Buy their car from a vending machine. I don't know. I don't know. I was going to buy a car. I'm going to buy a Tesla. I really want to buy a Tesla. I was looking at the Model E, but man, they're expensive. I was going to wait for the next model to come out. They got new models coming out here too. I can see what they are too because they got a really cool little model that's coming out. I'm going to buy it for my wife because she needs a car that'll drive for her. She's Filipino. She doesn't drive. She doesn't have a driver's license. So we'll get her we'll get her one of these cars that drives by herself, and then we'll go get her driver's license, and then we'll just put her in the car and say, "Drive by yourself." That's my theory. I mean, I think it'll probably drive better than she can. I tell her that and I laugh. I'm like, I don't want you driving. You scare me. All right. Anyway, this is Carvana. So I guess I'm going to be the point of that conversation was that I'm going to be buying a car from because to buy a Tesla, you just buy them on the internet. You don't go to a dealership. I guess you can. You can go to a dealership if there's one around. I don't have any dealerships around here, Tesla dealerships. I'd have to go to Vegas, I think. But you can just go on your phone and buy a Tesla right off the phone. And then they'll deliver it to you, or you'd have to go to I guess you'd have to go down to Vegas and pick it up. You have to go to the dealership to pick it up, but you can buy it right on your phone, which is, I guess, the same thing. That's what you're doing. And then you go to the little Carvana thing and you just go buy one, just go pick it up at the Carvana thing. You don't talk to anybody at Carvana. You go down there and you put your little code in there and the key falls out, click, like a vending machine. You take your key out, you walk up, unlock the door, unlock the car, and drive out. And you don't talk to anybody. I guess that's pretty cool. I guess that's something. It's a thing anyway. All right, here's GEV. Another one that looks like a really good one that we could come into and play with, right? You want to look at the options on this thing, $7,000. So 180.2. That's not bad. And that's not bad on the open interest for a Leap, 182. So you could buy that one. But let's say you did buy that one. Let's say you bought 25 grand of this GEV. All right. Can you do some covered calls against it? Let's go down and look at some 17 days. Are there any value in these things? No. So it's not bad. I mean, you could go buy your Leap and that would be fine, but you can't do any covered calls against it. You can't do it. Why? Because look, volume open interest sucks. What about Hood? Robin Hood. Let's go look. Oh, these are cheap. Oh, and there's a lot of them. Look at that. Look at that. Now that's sweet. That's sweet. Now the problem is they're not $49, but look at that. $1,200, 0.2%. That's sweet. Look at this. This is for a 325-day option on something that busted 100% growth last year. This is Robin Hood. All right. They're the little app on your phone that they're a brokerage firm. Little brokerage firm on your phone. So now we're going to come in here. And if we bought that, could we do covered calls against it? We could. We could do covered calls against it. Oh my gosh. Oh my gosh. We found one. There, it's like finding a needle in a haystack. Needle in a haystack. Haystack? Needle in a haystack. Let's buy 10 of these. All right. Let's come in here and we'll buy 10 of those. Because we got $60,000 left. We're looking for some good long-term leaps that we can sell calls against. That's what I want. That's what I want. If I don't want to sell a call against, I don't have to. But if I want that option, I want to be able to do it. All right. So this one here, where is this thing going to be? Well, this isn't exactly the best time to buy this call. So we shouldn't do it. We have to wait for a little pullback. We want to get this thing coming back down. All right. You don't want it on the rally. So, but we're going to keep that in mind. Robin Hood. We should write that down on the back of our hand. Robin Hood. Take a pencil. Robin Hood, because that's a good one. We could sell some calls against that. It's long-term leap. It's made 100%. It's in the 100% club. Didn't I put that in the? Yeah, it's in the 100% club. Made 100% last year. So that's good. That's good. All right. And this is a little pullback. We get an opportunity to get in there. We're not buying at the peak. It's not like we're buying it cheap. $59. So, and the high was 68. The low was down here at 30 or 50 now. So got Kind of well. Let's wait for a little pullback. Let's see if it'll at least come back down to the Fibonacci bow tie right here. We want to get it back down in there. If it'll come, if it'll pop back down here, back down in here, we'll buy our call as it's coming down. Buy our call coming down. All right. Right in this region here, we'll buy a call. We'll buy like 10 of them. 10. If it comes back down into there, that's all we need to see. Come back down in there. We'll buy 10 of those things. All right, there's another one. Home 10. Let's go see if we can do some day trading. I know you guys are here for day trading, and we're sitting here doing options, but the day trading was so awful. Oh, we're getting a little bit of movement in here. Coming in with the last few minutes, getting a little fluff out on the close. Oh, that one's making a little bit of a move. Russell. NASDAQ's still dead. It looks good here, but I don't really want to day trade this. It's just dead. Look at it. It's just dead. The S&P looked a little better, but just that, that's not great. That's a great trend. No, it's not. It's a shitty trend. It's a bad trend. I can't say shitty because if I say shitty, then I have to go to YouTube confessional. So I'll be careful not to say things like shitty and dumbass and things like that because those words are banned. All right, let's see. It's breaking higher. Is it going to come back down and just shake out the shoestring salesman and the weak sisters? There we go. Came down, broke those low points just to prove it can. Now it's trying to go higher. Let's see if we get a little run out of it. We can take one right now just as a precautionary. See if it'll pull back a little bit. We'll grab another one. Come on, precautionary. We're looking for a rally here. Come on, let's give us a little rally. We got a little pullback. It's like pulling back on the bows, like a little rubber band. We just now fling. Come on, let's get the fling. Now we're looking for the fling. We got the pullback. Now let's get the fling. We got to come up with a new name. That's a good name for a strategy. The fling strategy. The bow and arrow strategy. The bow and arrow bow strategy. We're in the bow, pull the string back and flip the arrow. Do you call it flip when you shoot an arrow with a bow? I flipped the arrow. That doesn't sound very manly. I flung the arrow. I shot the arrow. Shot the arrow. All right. We're waiting. Not breaking the green dots. We're getting a little sad retrieval here. Didn't wait for the green dot to go. We're trying to take it a little early there in anticipation. But now it's just dying on us, which is probably pretty much what we expected, right? Come on, you rotten dog. Let's make one trade today in the day trade thingy. What can you do for me? Come on. Got another one. But I screwed up and hit the wrong button. It's all right. We'll do it like that. All right, come on. Fling. There we go. Now we'll take that spare off. Because we had a spare, like a spare tire. Oh, 10-minute bell. Watch out. Here comes we got 1 minute to the 10-minute bell. And when that happens, the market shoots all over the place. And we don't want to be in the market when it does that. Okay, exit chart. We'll take that off right now, just in case. I don't like to be in the market during the 10-minute bell. It can work in your favor. Now the market could take off and shoot like a rocket ship straight up, and that would be. But I didn't want to be in the market during the 10-minute bell. Hold on. Countdown. Let's go to the countdown timer. See what the market does. 1 minute. How much we got? 24 seconds. Okay, we were long the market land. You'd have been making all kinds of money. I know, but I've also lost a lot of money when this happens. You get down here, I got 3 positions. I got 10 positions on. And then suddenly you hit the 10-minute bell and the market shoots all over the place and wipes you out. So let's wait and see what happens. You can always get back in. Precautionary. Oh, It moved in our favor. Would have been good for us. Land was too cautious. No, well. It is what it is. It is what it is. Okay, we got lower high. It's coming back. Think we're going to get another rally? We'll drop that in there and take a break above the next high. Oh, why didn't that work? Exit chart. Did we change that? Oh, that's Minesweeper. We got to go back to 777. Trail ATR. I don't want to trail ATR. 777777 is that trail? There's the one we want right there. Okay. All right, that's a little pennant formation, hopefully. And then if it breaks a previous high, wow, look how far that limit is. Way up there. We don't need that way up there. All right, now we're just looking for it to break. First candle break a new high, and we'll get back in along again. Just with a single. Come on, baby, come on. Fling, fling. This is the flipper. The flipper strategy. The flipper strategy, the fling strategy. Let's come and say hi to some people while we're waiting. We got Bruce coming in saying hello. We got Albert. How you doing, Albert? Good to see you, Kirk. Bruce, I've been reading the Buy and Hedge book by Jay Pestrichelli, and he's addressed the emotional component of trading. Yes, sir. That's because it's the core. That's the core. That's a really good book. What do you think of that book? I thought it was really good, mostly because it helped us have a little bit of insight into what the Yield Max funds are doing. So it's good to hear you got that book. How you doing, Lowdown Killer? I haven't seen you in here for a while. Where have you been? Hello, Lan and everyone. Hope you're all having a wonderful day. It's good to see you. Good to have you. Glad whenever you can make it. You know what? Anytime you can make it, it's a fun time to have you. So we got a lot more people watching than saying hi. So if you guys want to put up your little marquees and say hello, we'll make you famous. Right now we're having a little struggle of a time. Look how dead this market is. Can't really make money in a dead market. So we were looking at some option strategies over in the stock market, but we generally do that on Monday, Wednesday, and Friday for you guys who are just here for the day trading stuff in the afternoon. Tuesdays and Thursdays are our day trading stuff. We try to do a little scalping, a little day trading in the futures market in the afternoon session, right? But Monday, Wednesday, and Friday, we do the morning session, 8 a.m. Mountain Standard Time. If you want to come and join us, make sure you hit that little subscribe button so you get notified. Hit the little ring, the little bell, ding the little bell. You got to click the little bell so you get notified when we go live. I don't do a lot of canned stuff. I don't do a lot of canned videos where you just, oh, those are perfect. No mistakes, because they're canned and we just take out all the crap, right? You have to have all the crap when you do it live. So if you like live stuff, then come and hang out with us. You can't hide stuff when you're doing stuff live. You can't cherry pick. It is what it is. I can't say, oh, I lost money on that one. Let's cut it out. Let's not show them the losers. Can't do that when you're live. And if a dead market and we trade, well, we didn't cut that out either. Sometimes the market is just dead. You have to trade through a dead market. Well, then it's a dead market. You can't cut it out and say, I don't ever trade in dead markets. Nope. Sometimes you choose to trade in a dead market. And if you lose money because you're trading in a dead market, well, you got to show that you lost money in a dead market. That's what you do. Don't try and think that you're perfect. Nobody's perfect. Everybody struggles. Everybody struggles to make money at this game, right? So don't feel bad. Don't feel bad that you're struggling a little bit. Everybody struggles. Come on, you stupid thing. It's going to stop us out. Don't you dare hit that green dot. Don't you dare. Don't you dare hit that green dot. Come on, you lazy bugger. Lazy market today. Very, very lazy. Come on. Come on. Come on. Should we pull out the big guns? All right. We need you to start getting busy here with our voodoo science. That'll make it go up. If you don't go up, I'm going to stab you in the neck. We got some people who are new here and they don't know that we have voodoo science on our side. We got black magic. Oh, Oh, I can't believe you did that. Oh my, right in the heart. Just when we pull out the big guns, he like turned on us, didn't he? Look, it took away all of our money. We had profit. Now we have no profit. Take a short position, land. Take the reversal. Get in there. Fight, win. Get in there. I probably should have. I've got 4 minutes till the bell rings. Now we're in the futures market, so the bell doesn't actually ring here. I mean, the stock market rings over in New York, but this is in Chicago, and we don't close for another couple hours. And I know you have after hours over in the New York Stock Exchange, but that's different because once the market closes over there, you can't use stop orders. You can't use market orders. You can only use limit orders. But that's not true in the Chicago market. The Chicago market, we still have stops and markets and limits. We can do whatever we want. This last bastion of true capitalism on earth today, right? So you want to trade the Chicago markets because there's no pattern day trading rules either, right? You don't have to have $25,000 to day trade. You can start your day trading account as little as $2,000. Trade the micros. This is the mini. Micros are 10 times smaller. So if you want to just get started and feel like, hey, I want to get started and learn how to do this and not feel like you're taking a big risk, you can trade the micros. They're really fun to trade. The micro, if you come in and you trade the micro NASDAQ, that baby can make you some money, even in the micro. So feel comfortable to come try it. Give it a shot. If you want to use the software I'm using, I use Track and Trade. Here, I'll get out of the way so you can see how do I dig it out of the way? There we go. Trackandtrade.com. If you want to day trade like I'm doing, use the futures version like that. Go get it over there, and then you can do what I do, and then I'll give you all my settings, and I'll give you all my stuff, and I'll give you all my 777 strategies and everything. Here, in fact, I'll give you 777 strategies. Here we go. Oh, we're getting an opportunity to go long again. Look, maybe we better do that while we're there. We go. We'll just stick that in there. Oh, we didn't get the flip on the arrow though, so it might just be a little. Oh, it did. There we go. We got it. We got it. Let's flop another one in there just in case. There's too long. It looks like it's just going to be a little shelf and then go short again. Look, that's going to go like that, and then it's going to break, and it's going to go short. You're going to get a little ABC down. Watch this. Boom, boom, boom. It's going to go down. Think we'll get the reversal? Nobody knows. Nobody knows, but it looks like it wants to go down again. If it does, we'll take the reversal. Showing you my strategies. All right, you need 777. Here it is. There you go. Get your little cameras out so you can take pictures. There you go. That's the 777 strategy. And this is the one, it works pretty good. It works pretty good using the ATR. All right, so you got to have the ATR on there, but that's the settings for that one. We just got stopped out. We're going to take the short position this time. We'll pop that in there a little early. Let's try to take another one. There's two shorts. We're going to take it in the shorts. Come on, dead market. Come on, dead market. Okay, so it's moving in our favor. We got our stop automatically dropped. You see how it dropped the stop automatically all by itself? That's part of the quant system, 777 quant system. All right. So you got to have your chart set up. Notice that we're using the Heikin-Ashi bars. If that's no Heikin-Ashi bars, that's what it looks like. But these are range bars. Range bar 25, meaning that it's got to move 25 minimum moves before it gets a new bar. It has no time involved, no minutes. All right. And then Heikin-Ashi on top of a range bar. That's why we get these light, nice little flowing markets like this. And then we use the ATR, average true range. If we take that off, oops, that was a mistake. I didn't mean to take it off. I meant to show you the strat settings. Okay, ATR. Oh, we got stopped out again. So here's the settings, ATR 1 and 1. I kind of start off with 1 and 1. You can always make it a little bit more aggressive if you want to. If the markets are moving well, you might want to move those dots in, and that's done with the stop factor. All right, so you can move that up and down like this, make it go out, make it go a little tighter. See that? You can kind of move your stop where you want it. But I start with 1 and 1, and that's a good place to start. And then we come in here, and that's one. And then that's the long side, and this is the short side. So we're going to come in here. We'll go 777 on the short side. Okay, get your little cameras. Shoot, shoot, shoot. Oh, you're not seeing it. I didn't cover it up. Oh, well, here we go. Back to the charts. Okay, sorry. So here is I showed you the ATR chart settings. ATR. There they are. There's the settings. So here's how you move the dots. All right, like that. That's what I was doing when you guys couldn't see it because I put up the software. So that's how you change the stop factor. There's the market just closed. All right. So you got stop factor 1, period 1. That's how I do that. Let me get this a little bigger for you. Here we go. And now we come in here, and once we get that, and we got the Heikin-Ashi, again, Heikin-Ashi. It's like a little mathematical model. I call it the cheat codes, all right, over the top of the charts. And then you got the range bar 25. All right, so now we're going to come back to the charts. Now we're going to go back over the trade. And that was did I show you this one? I think I showed you this one. This is button 1. This is the buy button. Buy market. And this is the settings I use, ATR. And then when you get the little flip, you get the little dots flip from one side to the other. Boom, you hit the little button and away you go. You're in. And then it takes care of the rest. It has a limit order, it has a stop order. The stop automatically trails on the ATR. It's all very fun. All right, here's the second one. This is the short side. So in the futures market, you can go long or short either. You don't have to borrow the shares or anything like you do over in the stock market. You just kind of they just let you do it. So don't worry about it. You just do it. All right, it's beyond the scope of what we want to talk about right now, but you can go either way. If you think the market's going to go up, you buy. If you think the market's going to go down, you sell. To get out, you just do the opposite. If you bought to get in, you sell to get out. If you sell to get in, you buy to get out. That's it. Very simple, very easy. This is the same strategy. You're going to sell. You're going to set your stop automatically 100. Your limit automatically 100. Don't worry about the stop being 100 bars back because it's going to jump immediately to the little green dot, which is right here, the ATR. All right. So then we got that one. We come down here. And I didn't set that as the default. So we'll come down here. We'll set that as default. 777. 777. Okay, now this is the stop entry. So this was a little bit more complicated. I'll set that as default. 777 stop entry. So it's going to trail on this one here says ATR. So it's going to trail on the little green dots. And as the market crosses the little green dots, it's going to get you into the market because it's an open stop. All right, it's an open trailing stop for entry. And so this one, whether you're going to go down or trail and go up, and if you're going to go up and trail and break and go down, it goes either way. So you only need one. All right. You're going to trail on the ATR, and then it's going to trail back. This one trails back, price bars back. Now, the reason we do that is because it pulls your stop in a little bit more quickly. All right. So play with that one. So that's your strategy. Go, okay, picture of that one. And then I meant to save that. I wanted to save that. Let's go back down to 777. And we want to save that as our default. So go ahead and say, okay, like that. Now we're going to come in here. And this is the limit version of 777. It's a little bit more complicated. Go ahead and take your picture of that one. Because that one you're going to enter. We said this was this is just trails on. The difference between this one and that one is one trails on the ATR. This one trails on the price bars back. So if the market's a little bit more aggressive and it's moving a little bit more powerfully, you might want to use this one. Because rather than trailing on those little green dots for entry, it trails one price bar back. So when you're trading with the Heikin-Ashi bars, you get these flat bottom bars, and we like that, right? Lots of flat bottom bars. So if it's trading the flat bottom bars and it's making a nice steep rally, you're trying to try to catch the reversal. You want to catch it as soon as it's no longer making higher lows, right? Definition of an uptrend is higher highs and higher lows. Definition of downtrend, lower highs and lower lows. So if it reverses and it goes from making higher lows and higher lows and higher lows and higher lows, suddenly you're going to go to lower highs and lower lows. Well, then you want to catch that trend so you can trade the price bars back. So this is just take a picture of that, and then it will trail out on the ATR, right? So it'll get you in a little bit earlier. So here's the example right here. See all these little green bars? Well, if it would have been doing one price bar back, you'd have got in right here, as opposed to down here at the break of the green dots. See, that's the difference between these two. And I did it again, 777. So let's make that default. Say, okay, there you go. And that's the difference. All right. Delete all tools. Okay, so there's how you do it. Let's go in short. So you could come in here and you say, okay, I'm going to go short. But I hadn't flipped the dots yet. So it's going to sit up there until the dots flip. As soon as that dot flips to the other side, well, what's going to make that dot flip to the other side, Land? Well, it's got to go down far enough to break the dots it's got range 25 with the Heikin-Ashi. So it's got to make a Heikin-Ashi range bar 25. There it goes. See, now the little dot moved to the jump to the other side, and your stop will start trailing down automatically. That's a long ways back on the stop. Well, okay. Well, you got control of the stop. You can come in here and make it a little tighter, right? Just zoom it in there, and it'll move. It'll come down. And next time that bar moves, it'll jump to that little green dot. And that little green dot, I got a little closer now. See that? There you go. Now you got a little closer green dot. So now you can trail your stop. But if you want to, you can trail one price bar back. You can come in here and go edit like that. You could say, I want to trail price bars back. And you go 1.1. I do 1.1 because that's the spread. Because the spread after hours has gone to 3. So that's a little bit wide. We like a 1 spread, but You know what? It's after hours. Markets are closed. So now see, it's trailing a little tighter in here. But if you trail a little tighter, well, you got the chance that you might get stopped out earlier too, just on a little pop back. It might come back and give you one of these little, one of these little, I call them spiky dikey doos. Come back and spike you and then keep dropping. So that's why you might not want to be that close. So if you got two contracts, you come in here and say, "Oh, I'll take a second one." So you can have one trailing on the trail on the price bars back. You can have one trailing on the green dot. That's pretty cool, right? So you can do that. And then you got one that'll get stopped out if it comes back and touches this. And that way you could come in here to the ATR and you could loosen it up again. You can say, "Oh, I don't want to trail quite so tight. Trail it out at 1 and 1." Okay, well, they give it more room to go. Maybe right there. All right. So now we're at 8 instead of 1. And then that dot, as soon as it moves, as soon as we get a new price bar, that dot's got to come down closer than our stop. Our stop's right now closer, so it'll stay closer. It doesn't ever push the stop back. The dot will have to come down and catch up to where the stop is. Let's see if this market will give us a little bit more push there. A little push. There you go. We can take our limits now too, and we can come in here and say, "Hey, let's take one off right there." That's a target, right? Limit. Take a target off at 29 ticks. You can see right there. It says 29 ticks over here. On this side, it tells you the money, $142. But it's backing off now. Oh, you rotten dog. We just lost our money. Just lost it. We didn't have our stops close enough. Now the market's turning around and coming back up. Now is it going to stop us out and go the other way? Or is it just going to turn around and start to fall one more time? Probably stop us out because that's our luck. That's my luck. But that's the name of the game, guys. If you got a nice trending market, unlike today, we have better luck. So I don't know. The other day we were scalping. We'd have probably had better luck scalping today. We were scalping and we were missing all the long trends. So we thought, well, we'll do 777 next time and we'll do some trends. So then we come over here and the market's not trending. So 777 is definitely for a nice trending market. But at least you got the strategy. You can practice it, use it on your own, and see how it works for you. See if you like it. Works pretty good for me. I like it. It's one of my best strategies. Well, at least we got our money back at this point. $55. We're not in the red. All right, come on. Touch that. Touch that candy. Take it. Oh, there we go. We got some candy. All right, let's come and do one more. See if we can get another one out of here. We'll stick that in. There we go. We got some candy. All right, we're down $400 all. Last one we got 280, but we had some bad ones in there. All right, that's how it's done or not. And hopefully you guys are practicing with your own. Paul, great to see you. Thanks for the nice compliments. Hope you learned something. The one thing I can't do is make the markets trend. So I can give you all the tools, I can give you all the algos, I can give you all the fun stuff to make the market take advantage of the markets. But it's your job to decide when to click that button. All right. Your job is to decide when it's time to click the button. And I can show you when I like to click the button. I like to click the button when the market's trending nicely and around these arrow points. These are good places to be clicking the buttons. But until then, have a good evening. Have a good day. We'll see you tomorrow morning, bright and early, and we'll continue our conversation with the options stuff that we started here in the first of the class when the market was dead. So we'll go back and start looking through some options. For those of you who are here with the stock market stuff, come and join us for the options class in the morning, bright and early, 8 o'clock Mountain Standard Time, and we'll continue our conversation. And then today is Tuesday, so Thursday we'll do day trading again. All right, guys. That's pretty much all I got for you. Don't forget to subscribe to Pitt News Magazine as long as it's still on sale, because I haven't changed the sale price yet. Still 50% off, and we got some really good articles coming. So go pick that up, and we'll catch you guys tomorrow. Take care.